So Apple have just announced that they're going to do a stock split. Now, if you don't know what a stock split is, it's very, very simple. It's basically when a company, usually a large company, decides their share prices run up too high for the average investor to be able to afford at least one share, they decide to do a stock split. So just for the sake of argument, let's say Apple's share price at the moment is exactly $400 and you own one share. So instead of having one share worth $400, Apple are going to do a 4-to-1 stock split. So instead of you having one share worth 400, you're going to have 4 shares worth 100. So it basically means they're diluting the shares. There'll be 4 times more shares in the market and they'll be worth a quarter of the price. It fundamentally doesn't mean anything to change with Apple. It's not like they're doing better, they're doing worse. It's just what they're doing to get more people to be able to afford to buy one share. A lot of people out there can't afford to buy a share. They can't afford 400 USD to buy a stock. So that they want to basically make more people be able to purchase a share at $100, which obviously is a lot more affordable. Now, I think it's a pretty smart move. The reason why is one of the trends that's happened in 2020, I think, which is different to other years, is the spike in retail investors investing in the stock market. So if you don't know what a retail investor is, it's basically like me and you, the average investor that decides to put $1,000 in Amazon, $1,000 in Facebook, $1,000 in Microsoft. Whereas the institutional investor is basically a large company which invests money on people's behalf. So you might say, right, I don't know what I'm doing. I don't know enough about Amazon. I'm going to give 10,000 US dollars to this company and they're going to actively manage, they're going to buy and sell stocks on my behalf. There's also hedge funds, which is usually like high net worth individuals. You might need $1 million minimum to give to these hedge funds and they'll invest that money on your behalf. But only 25% of the market are retail investors. So basically, Apple are trying to appeal to that 25% in a bit of a broader sense. So the Robin Hood investors of 2020 who are, no one knows where to put their money in this day and age. The interest rates paid in banks is basically at zero, so the banks don't offer any return. A lot of people are getting these stimulus checks. So a lot of people are actually getting more money than they were previously prior to this, pandemic. So people don't know where to put their money, so they're just chucking their money into the stock market. But by having a share price at $100 versus $400, it basically means, it's more accessible. However, if this had happened 10 years ago, bear in mind Apple had done this before, it might be a bit more effective. Whereas in this day and age, a lot of brokerages do offer fractional shares. So you would be able to buy 0.25 of a share. If an Apple share was $400, you'd own a quarter of the share, that would cost you $100. But it's a bit of a psychological element as well. People don't want to really own half a share. People want to feel like they're owning a whole share. So I do think it's quite a smart move by Apple, really. It's something that they've done before and it's worked. And, over the years, Apple's share price might climb back up to $400 again, and they might do another stock split. So purely due to the nature of it, Apple's share price is going to be a bit more volatile now. Think about it. There's 4 times more shares out there, obviously worth a quarter the amount. There's going to be able to be more buying and selling. So for an investor like me, as someone who wants to hold companies for a long term, I don't really like volatility. The only time I like volatility is if a company I want to get involved in, the share price drops. Whereas a trader who might want to hold a stock for a day, maybe even an hour, maybe even 5 minutes, they want to get in and out very quickly. This is going to be a good thing because there's going to be more ups and downs. There's going to be more spikes in the stock price. So this is a good thing for them. And that just kind of comes with the territory. It doesn't really matter if you're an investor really, but for a trader, it's going to be a good thing. Another thing to consider, which I think is quite important, is if you own shares in a company, you believe in the company more. Obviously, I own shares in Tesla. Because I really believe in the company. I believe their vehicles are going to be absolutely game-changing. They're doing great things to the planet, and I think they're going to grow bigger and bigger and bigger, and more percent of the market are going to own Teslas in the future. Because I've researched that company, because I know a lot about the company, I'm naturally going to gravitate towards buying a Tesla over another vehicle, over one of their competitors, because I've researched the company, and I love their products and I want to own a Tesla one day. Like when I'm walking down the street, even now, and I'll literally stop. If it's a Ferrari, I'm not that bothered. But if I see a Tesla, I'm like, wow, like checking out, like I want that car one day. So you just naturally gravitate towards that. So let's say you're 18 years old, you're in college or university, and you're looking at some companies you want to invest in. Let's say you can't afford an iPhone or you can't afford an Apple Watch or a Mac, whatever that is. If you're an Apple shareholder, you're naturally inclined to want to buy an Apple product over one of their competitors. So I think it's quite a smart move. I think Apple are getting the retail investors involved with their shares, and as a byproduct of that, people are naturally going to buy their products more. You know, for me, I am an Apple shareholder, so I've got an iPhone, I've got an Apple Watch, AirPods, Mac, iPad, got it all. So naturally I'm going to gravitate towards that because I'm an Apple shareholder. So I think it's something very interesting that they've done in that sense from a business point of view and from a stock point of view. So another couple of companies whose stock price has run up really high recently are Amazon and Tesla. Now, Amazon have announced that they're not going to do a stock split. Whether they do that in the future, if their stock gets to 4,000 within the next year or something, then they may do that, I think, because not a lot of people will be able to afford one share of Amazon at $1,000 despite being able to offer fractional shares, so that they may do that, but at the moment they're saying they're not going to do it. It doesn't look like they have any interest in doing it at all at the moment, but Tesla, on the other hand, for about 5 years, their stock price varied between $200 and $300. Then the last sort of 6 to 9 months, the stock price has run all the way up to $1,700. At the moment, it's around $1,400-ish. So Elon Musk has actually announced that it's something they're going to discuss in the September battery day. So Tesla have got this battery day in September. They're going to announce, the new battery, the upgrades, the capabilities, things like that. And one of the things that Elon Musk has come out and said is that they are going to consider it and they are going to talk about a stock split. And it really wouldn't surprise me if they do. Because Amazon's been around for 20 odd years, they've got a huge market cap, the revenue is insane, they've just beat all expectations pretty much on every earnings call. So Amazon are an absolutely huge company. Whereas Tesla, although they are a huge company, by revenue terms, they're not, they've only been profitable 4 quarters. For sure, over the coming years, of course, in my opinion, they're going to be extremely profitable. But because they're not on the scale of Amazon and their stock price is like $1,400, it's not really accessible to those 25% retail investors. So I'm pretty confident that they will do maybe a 2-to-1 stock split where if you own one share at $1,400, they'll give you 2 and they'll be worth $700 each. They might do a 4-to-1 to take it back down to around $350 again. And if you own one, you'd get 4 shares, kind of thing like that. So it's something that Tesla will probably do. And if I was owning Tesla, I would be like, yeah, this needs to happen because our stock price is too high. Elon Musk even tweeted a few months back he thinks the stock price is too high. So it's something that I think that Tesla will do. It's definitely not anything to worry about. Definitely not anything to be alarmed about. It's the nature of the beast. It's the nature of holding a stock in a company like that they might do a stock split from time to time, but it really doesn't affect you on a day-to-day. As long as you plan on holding the company for the long term, it really doesn't mean much at all. Hope you like this video, guys. If you've got any questions about a stock split or anything else, just leave them in the comments down below. Please also hit that like button down below and don't forget to subscribe, and I'll see you in the next video.